Good morning, everybody. Hey, welcome to Wednesday, November 27th, the day before Thanksgiving. I know if you're like me, you're excited to spend some time with family and friends over this great holiday time where we really take a break and give thanks for where we are, what we've been able to accomplish, and the blessings that God has bestowed upon us. And I want to take a moment right now and thank you for continued support, your continued listening to our videos on a regular basis. And I hope you have a very happy Thanksgiving. And as we get ready to talk about the markets, yesterday was a great day, and we look forward to another day today as we still see a little bit of green ink this morning before the markets really get opened and up and running. So we've got a few earnings reports today to talk about, and so Dave will be with us here in just a moment.
Line FM Coldplay is there. Hi, good morning. Buenos dias, y'all. It is the day before Thanksgiving, which is always a weird day on the stock market because markets may be open, but a whole lot of the heavy hitters are going home and hitting the eggnog early. Let's see what's going on this morning as we got a whole pile of news to share with you. Downtown to the offices of Statler Financial Services, we're talking to Phillip Statler. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, doing well today. The day before Thanksgiving, we get going, and lots to get done today before the holiday.
Absolutely, and a whole lot of the investors do about the same and head for the doors about noon. We both kind of got surprised because I had on my calendar a lot of the data dump out of the federal government that normally would come on Thursday and Friday was going to come out around noon today, but some of it came out early, like, for instance, the jobless claims. 213,000 first-time jobless claims last week. We had a couple of layoff announcements last week, made us kind of think that we might have an increase, but it was down 15,000 from last week. We're having no trouble maintaining full employment, are we?
Well, it definitely looks that way, Dave, because the analysts expected 220,000. So I think we could say that was a pleasant surprise. And I don't know, maybe some of it could be, Dave, that we've got the holidays coming. And so we know that there's some at least holiday hiring going on right now, too.
And that's a valid point. It might just buy enough slack in the market so that the folks that were laid off a couple of those factory closings we were talking about last week might end up having enough time to be able to find a permanent job while we're hiring in earnest for the holiday.
And I think that could be part of it, but the rest of it is, kind of just the ebb and flow of markets out there.
Understood. The other information that kind of surprised us is we got a report on the gross domestic product. They take 3 looks at the GDP for the nation. This is the second look at what the third quarter was. We were a little disappointed when they came out with 1.9% last month. At the first look at the third quarter gross domestic product, they revised it upward this morning to 2.1%. Number one, more respectable, and number two, a pleasant surprise, I gather.
It was a pleasant surprise, Dave. Everybody had basically expected it to come back in at the 1.9, and for that to be the number going in for the third quarter. And so that was definitely a pleasant surprise, and I would say I was surprised by it too. So I think that gives some credence to the third quarter really kind of maintaining. It'll be interesting to see how the fourth quarter plays out because I've seen a couple reports now that have kind of given some indication, like you and I have been saying, of a slowdown in the economy. And I'm seeing a few more headlines now reporting on that.
Yeah, when we get to the company news, whatnot, I got a couple of guidance warnings that don't look too terribly hot either. So, yeah, we've got indications of a leveling off at the absolute least. The other big data dump that we had today was the durable goods reports. Again, this is stuff that businesses are buying that's expected to last. And it was a pleasant surprise. Overall, it was 0.6% up in October. Once you factored out defense purchases, it was only up 0.1%. And you tell me that we were expecting worse than that, huh?
Definitely. Durable orders were expected to be down 0.8%. So, if you look at that, including defense, being up 0.6, that's a pretty big swing.
Oh, we'll take that any day going into Black Friday and the retail shopping rush. By and large, it was another great day yesterday on Wall Street. The Dow hit a new intraday all-time high, leveled off a bit at the end of the day, but still ended up 55. NASDAQ and the S&P both set new closing records. And I noticed something interesting. I'm throwing you a curveball here because we didn't talk about it before we went on the air. I was looking at the Russell 2000, the small stock index. Now, it hit a really big high about a year and a half ago, but it's now at its 52-week high as well, and heading back at the very least in a favorable direction toward its record. So basically, this is a buy-up on equities that takes it from the biggest companies all the way down to the smallest, doesn't it?
It definitely does look that way, Dave. You know, yesterday I saw the small cap, the S&P small cap index was actually negative a little bit yesterday, but looking good this morning. And so it looks like everything seems to be firing on all four cylinders in the equities market. And so you think back to the last time you saw this kind of enthusiasm within the stock market. And again, it gives us some concern about what's going to happen in 2020 and going forward. And I think that you and I both agree that between now and election time, the market's got to stay upwards because, let's face it, President Trump wants to get reelected, and the economy and the markets will play a big role in that.
Absolutely. It's we're definitely staving off the cycle. Whether or not we're going to reverse it, I don't think anybody's ever figured out how, but leveling off would be not a great concern. A vertical curve upward, which we're almost on right now. I mean, I don't want to start sounding like a doom and gloomer, but at the same time, what goes up got to go down, and I'd be kind of happy with some small percentage gains and flat days in here.
Yeah, I agree with you, Dave, because I'm the same opinion. If this thing goes up fast, then that means it could fall very fast, and I'm thinking in terms of '08 versus 2000 in terms of how the declines occurred. You know, in 2000 it was kind of it went down, but it took 2 or 3 years to get down. In 2008, well, it was pretty painful to go down within basically a 9-month period of time.
Mm-hmm. Yeah, another '08 is what everybody's nightmare would be. Couple of company news that I got guidance reports out. John Deere issued a profit warning. We're starting to see guidance for the next quarter's reports out. I don't think this is a full report, but they said the ag industry is proving real soft. Probably the tariffs causing that for the first half of the year, and they put out a profit warning. So they're in my big loser list this morning, down by over 5% just simply on that warning.
So they did actually report earnings today. Yeah, so they were up. They beat estimates by a penny a share. Revenue also topped the forecast. But you're right. They gave some profit concerns, and it's due to, again, the lingering trade tensions and kind of the ongoing uncertainty in that whole agricultural sector. And so, yeah, you picked that one pretty right. They've bounced a little off. They're down 4.5% right now. On the pre-market trading.
Yeah, the first half of the year was real beast up in corn and bean country because the Chinese stopped buying our soybeans and started placing orders with Brazil. Farmers up there were just having a beast of a time, and $190,000 combines don't get bought much when you can't sell your beans, you know?
No, that's definitely true. How the technology side, we had Dell Technologies report. They came in 13 cents ahead of estimates. Revenue was a little below what the street had forecasted, and they cut their full year revenue forecast. They're saying they're really having to deal with some shortages when it comes to from chips. The Intel supplier is having some difficulties delivering on some chips, and so they're trading down about 4.5% also this morning.
That was the other profit warning that I saw because Dell had issued that, and I figured they were probably having a bad day, even though they weren't on my winners and losers list this morning. Any other indications we got before we get into a long weekend?
I do. I've got Guess, the retail store, clothing store. They beat by 4 cents a share. They did miss on top-line revenue, though. They lowered, again, another one of those lowered. They lowered their revenue outlook to the lower end of their projected number going forward, and their same-store sales fell 3% during the quarter. So, again, they're kind of like the other two we talked about. They're down about 5% this morning before we get started.
Yeah, we're kind of seeing a trend here. Premium priced stuff in the retail trade hasn't been having a great quarter. It's the discounters that seem to be doing better, right?
It definitely looks that way. I've got two technology companies. We've got HP, the guys that make the computers and the printers. They beat by 2 cents a share, and revenue came in above what was expected, despite some business weakness that they're kind of projecting out. But they did raise their full-year guidance. So they are up a little bit. They're up about 1.5% this morning.
That was enough to make my big winner list so far.
Really? So I would think Box.com would be your big winner today on the technology front. They lost a penny a share. They're basically they matched the street on revenue. They're I don't know. People may not know who Box is. It's kind of like the file sharing place. So I use them a lot. Businesses use them probably more than individuals do. What's that?
Is that Dropbox?
It is not Dropbox. Dropbox is a competitor.
Okay.
It's just called Box.com. And they raised their full-year forecast as they continue to grow their revenue base. And so they're up 4.5% this morning.
Cool. That was a new one to me. I hadn't heard about them yet. Resetting the table for the morning, once again, yesterday was a record close on the NASDAQ and the S&P, an intraday high on the Dow, and we're within spitting distance of a closing high as well. 45 minutes before we open up this morning, Phillip, have we got good news on the markets so far?
Well, we just switched a little mix here, Dave. The Dow's actually gone a little bit to the red, down a whole $4.50. The S&P 500 is up 0.1%, and the NASDAQ's actually trailed off some from when you and I first started talking. They were up about 0.25%. Now it's only up about 0.15. So things are starting to fall. I'm not sure what they're seeing out there that you and I are not seeing. But yeah, some of those indexes are starting to wane a little bit. When we look at the commodities side, we've got gold and silver both trading down this morning. Again, gold's down about 0.5%. Silver's down about 0.7%. And then crude oil is kind of flat from where it closed yesterday. It's at $58.41 a barrel.
All righty. World markets generally all in green ink after a good day over here yesterday. Asia evenly green at the close this morning. Europe generally trading up midway through their day today as well. Phillip, happy Thanksgiving to you. I know folks are thinking over the Thanksgiving dinner table. Can I afford one when I retire? Less good. How do I make sure that I can do that by making an appointment with you?
Hey, Dave, they can give us a call at 382-0037. They can also check out our website at statlerfinancial.com and join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730. And to you, Dave, I wish you a happy Thanksgiving. I want to let you know how thankful I am for the time you and I get to spend together almost every weekday. And thank the listening audience out there, and I hope every one of you have a very happy Thanksgiving dinner.
Well, thank you very much. I'm truly grateful for you here as well, Phillip, and happy Thanksgiving to you and your family and everybody in the office at Statler Financial. Have a great one, all right?
Thanks, man. You have a great weekend. I'll talk to you on Tuesday.
Got you covered. It's 105.7 Highlands Light FM and Statler Financial Services. Phillip Statler.
Of all the